How we doing, traders? Welcome to the SPACs attack. How we doing? Had some issues with my internet this morning. Trying to do the best. We're gonna do the best. We want to bring you this interview. I know Chris and I are really eager to get this started. So what I want to do is definitely check the internet. How we doing out there? Let's go ahead and put a 1 if the stream is good, guys. Put a 2 if you guys see some lag. I just want to make sure before we bring on our guests that our stream is looking well. Like always, guys, hit the like, hit subscribe below if you're new to the show. And let's get started. Chris, is there any headline news out there that you want to speak about before we bring on the guests?
Yeah, let's hit on some headlines. Guys, thanks for your patience. I know you're excited about this interview. We just want to hit on some SPAC headlines here real quick. So first one I have, so symbol FEAC, that's the SPAC merging with Skills. This is one we've talked about on the show a lot. They announced that their merger vote date will be December 16th. Looks like that stock is up 8% today on that news. Then we also had a date set for LCA merging with Golden Nugget Online. That date is set for December 18th, and shares went up after hours yesterday and are now up 9% today. We also have a meeting set for SAMA, a SPAC merging with Clever Leaves. That's now set for December 17th. The Benzinga cannabis team has had some interviews with Clever Leaves before, so if you're interested in this company, be sure to head to the website, check out those interviews. This is a cannabis company coming public via SPAC. And then LGVW, Longview. This is one we've talked about on the show before. Kathy Wood added 259,000 shares of the SPAC, which is acquiring Butterfly Network, portable ultrasound company, to one of the ARC ETFs last night. So she's bought shares in this company before, and it's pretty notable since the ARC funds are some of the best performing, and they've only bought LGVW and IPOB pre-merger close for these SPAC deals. It looks like that stock's moving on the news today. So again, guys, I know we've got some new viewers here, and you're excited for the interview. We're trying to be the #1 live show covering SPACs and IPOs. So we'd love if you hit the like button below, and if you subscribe to the channel, and be sure to tune in every day at 11 a.m. Eastern time, and go ahead and share the show with your friends. And that's it for headlines, Mitch.
All right, guys. So definitely I'm seeing that we are getting a lot of people joining in, but there is some lag. So I want to check in on everyone right now. Definitely give a shout out to some of the loyal people that we always have in here. I know we got Mohammed, Francis, Bill, Hayes. How we doing, everybody? Hit the like. Let us know. Are we still getting a little bit of lag? I want to make sure that we don't get no lag when we get our guests on. So hit the 1 if you guys see. If you guys are still seeing some lag. All right, looks like we're still getting a little bit of lag. Yeah, you guys can thank lovely Comcast. I have over 400 megabytes, and it looks like they're not working today. So looks like we're getting back here. I'm starting to see some 1s. All right, guys, let me check in on this and give me 2 seconds here. Chris, go ahead and talk about what SPAC we're going to be bringing on today.
Yeah, so guys, our interview today is going to be with TJ Jiang. He is the CEO and co-founder of AvePoint. So they're merging with Apex Technology Acquisition, that's symbol apxt. They're a large Microsoft Cloud supporter in the software as a service industry. So we're real excited about this interview today. I know there's a lot of you waiting. Just bear with us here while Mitch gets the internet figured out here. And yeah, you can go ahead and thank Comcast for the lovely connection today.
All right, guys. So what I want to do here is I'm going to go ahead and bring on our guest. I want you guys to let us know if he's laggy. I know that everyone's been saying that I've been lagged. Chris, it's been sounding good from what I hear. So I'm going to go ahead and just try to start this interview without me, guys. So I'll stay in the background. Let me know in the chat. I'll keep an eye on it, guys, and let's get this started. So go ahead and Chris and introduce our guest here.
All right. So again, guys, our guest today is Dr. TJ Jiang. He is the CEO and co-founder of AvePoint. TJ oversees product strategy and business development for AvePoint's global businesses. And AvePoint is merging in a SPAC deal with Apex Technology Acquisition. That's symbol APXT. So thanks, TJ, for joining the show today.
How are you?
Hi, TJ. Thanks for joining the show.
Good to be here, Chris. Can you hear me okay?
All right. Thanks for your patience. Looks like we got the connection figured out, at least for you and me to talk here.
Yes, I can hear you crystal clear.
Can you hear me okay, TJ?
Yes, I can hear you. I can hear you just fine, Chris.
Okay. I'm going to go ahead and start in on the questions here.
Sure.
So really excited to have you on the show. So I guess my first question is, so why did AvePoint decide to take the SPAC route to bring the company to the public market?
Two reasons. One is the SPAC process is actually much faster. So this way, me and my team can go back and focus on running the business. Second is when we actually checked out this option versus the traditional IPO option, we also ran into Brad Kinnick as well as Jeff Epstein. So Brad have many years of capital market experience being the head of Goldman Technology investment banking, as well as Jeff Epstein, ex-CFO of Oracle, as well as a board member of Bookings and Twilio. So both gentlemen have incredible operational and capital markets knowledge. We think that they could be a real value add on our strategy and scaling the business, growing much faster going forward.
Excellent. So I know you guys had a funding round in January. So how close were you to kind of going the traditional IPO route instead of a SPAC here? Was it just the timing and being able to hit the market faster?
So yeah, we actually checked out we were doing dual tracking. So we were going along the traditional IPO route. And then we talked to the folks at Apex, and we right away hit off well. We think that the combined partnership will be great for the organization. And of course, again, the timing of it, the whole process is much more compressed in a SPAC process versus a traditional IPO. So me and my team can focus on running the business. Our business is growing nearly 30% year over year here, and we're very excited to go forward. The market's fantastic. We have 7 million active users here in Office 365, but the goal is to get to 50 million. That's 10% of the Office 365 projected growth market. So again, with Teams being 115 million active users today, it's a fantastic market for us to scale up and grow quickly to capture.
Awesome. So I know you've talked before about the relationship with Microsoft. So you help bridge the gap between what Microsoft Cloud offers and what the enterprise companies require. Can you kind of tell us what that entails as far as the relationship with your partners?
Yeah, so we have a relationship with Microsoft for the last 19 years. So our company has been around for 19 years, which for a software company, it's rare, right? A 19-year software company is still the most exciting part of its evolution here. So we have always been a Microsoft ISV, independent software vendor. We develop products on top of Microsoft stack to complete the last mile problem for our enterprise customers. We really focus around enterprise customers around the world. 40% of our business is North America, 30% APAC, 30% EMEA. And the way we work with Microsoft is at a regional level. Microsoft sales actually have this IP co-sell program. It's an internal sales spiffing program that effectively incentivize the Microsoft seller to work with our sellers, because everything we are working on are on Microsoft Cloud. We improve and accelerate Microsoft Cloud consumption. So all of our software sits on Azure, and it consumes Azure Cloud and compute, and then help customers manage their Office 365, which is Microsoft Office Cloud data. So there's that sales collaboration there. We are actually top 5 globally in terms of IP co-sale program, in the same class as Adobe and DocuSign, much larger companies than AvePoint. So this means AvePoint is asymmetrically very, very important to the success of Microsoft Cloud to Microsoft here. So that's one. And secondly, we actually have a number of Microsoft MVPs as well as RDs, research directors. There's only 100 such people around the world. These are community evangelists that Microsoft selected to represent the community voice. And with that, we actually sit across 5 product committees, so what they call PAC, Partner Advisory Councils. These are feedback committees. So we actually see the map time, providing real-time feedback to Microsoft from the field, how our customers see their product, how we see their product, how our partners see their product. So this interaction allow us to see also where Microsoft's going, where they're investing, so we can stay ahead of the curve and go to the areas that, again, complete the last mile problem for the customers, so provide additional value. So we have this win-win symbiotic relationship with Microsoft for the last 19 years. And in the cloud world, this relationship is going even better.
Awesome. So I know you've talked, Microsoft has 250 million users for its Microsoft 365 product. AvePoint currently has 3% market share among those customers. Your goal is to get to 10% share, and you see Microsoft increasing its user base to 500 million people. How will they hit 500 million, and how will you kind of get to that 10% share level?
Yeah, so today we have the first mover advantage because we invested in Microsoft Cloud very early, back in 2011. So we actually been doing Microsoft-based SaaS solution for B2B data management for the last 9 years. In the 2020 COVID pandemic world here, there's a saying that you can't fake SaaS. So for enterprise customers to have a true enterprise-grade SaaS solutions that's fully 24/7. That's actually across multiple 14 different data centers to make sure we handle all the data sovereignty concerns, all the failover concerns, and also security concerns. Just because you run your solution and data on Microsoft Cloud doesn't mean that the third party also can not worry about security. In fact, enterprise customers have the same rigorous demand around security validations and vetting to third party like us running on Microsoft Cloud as Microsoft. So we actually have done all these ISO audits as well as the security audits to make sure that we can even qualify and run in FedRAMP certified government data centers in Arlington, Virginia, for example. So we have this fantastic relationship. We have the first mover advantage, and we have also the end-to-end solution around information management. We don't just do one thing. We do data integration and transformation. We also do data management and governance and protection. And then we also do compliance, record management, data privacy handling. So it's really an end-to-end SaaS platform that handles the entire life cycle of enterprise data from birth to retirement, and also to proper deletion and purging of data. So from that perspective, we have no singular competitor. So with that, we want to move much, much faster, move aggressively on marketing, around channel, scaling our business through distribution channel, selling into the MSP network, managed service provider network. That's huge in the SMB space. We play very, very strongly in the enterprise space. With SaaS, we're now much, much more accessible to the SMB space. So there's many velocity for faster and scalable growth. And that's how we think that we can take advantage of the current condition here and go from 7 million to 50 million users in the next few years.
Awesome. So I know your relationship with Microsoft has been for many years now. So we've seen Microsoft, really shift to that cloud market. And then also the
Yeah.
pandemic seems to be accelerating growth. So what can you tell us kind of about how the pandemic and their emphasis on cloud now has kind of transformed their business and AvePoint's growth going forward?
Absolutely. You know, Satya Nadella, Microsoft CEO, has famously said this year, the pandemic has accelerated digital transformation journey. What used to take enterprises 2 years to complete the process, and these are large enterprises, right, with 10,000 employees and up. And now in the course of COVID here, compressed down to a couple months. Sometimes we see customers have to move in a matter of days. So this pandemic has really accelerated that journey and that movement to Microsoft Cloud. That has already been happening for the last few years, but this year it's really the pace, the cadence, significantly increased. You just look at Teams usage, right? Microsoft Teams, end of last year, it's only 20 million active users versus Slack's 12 million. By April-May timeframe, it's already 75 million. By now, they just Microsoft just announced it's 115 million. That's nearly a 500% increase in active users usage of Microsoft Teams, which is, of course, their enterprise collaboration solution that sits on Office 365, that uses all the complex workloads like SharePoint, like OneDrive, and planners and projects. So that's the killer app from Microsoft. And we are actually the dominant player around Teams governance, Teams backup, and Teams management. So we see customers coming to us and say, hey, because Teams is designed to go viral, just like Slack, all of a sudden everybody's working from home. Everybody's creating chat channels, private channels, Teams chats, sharing contents internally and externally. Things are getting out of control pretty quickly from a data sprawl perspective, because these channels and digital assets, once they are created, they sit there and they don't disappear. So when the project's over, when the conversation's over, enterprises need a way to automatically remove access, turn off external access, and retire team assets, retire channels. Otherwise, you have thousands of channels proliferating very, very quickly. So this is where we come in to help enterprise automate all of this process and with our SaaS software. So yeah, we see a tremendous uptick during the pandemic periods of because folks are working from home. There's a real uptake in the Teams governance workload area. Of course, we also does more than just Teams management. We also do the entirety of Office 365 backup, record management, governance, and migration, integration, helping customer go to cloud faster. So all of those workloads also see uplift.
All right, so I want to talk a little bit about some of your digital collaborations. So I know the one that stuck out to me was kind of a mention about Microsoft Teams and Slack. Can you kind of talk about any integration you guys have with people that are using both Teams and Slack?
So Teams and Slack are competing products. Typically, what we have done is we actually help customers move from Slack's full fidelity into Teams. So all the chats and all the assets, and with all the right provisioning and security management. So we actually do the migration of that. We were the first globally to offer that capability, and we see uptake there. Yeah, I think these are two competing offers. I actually think it's good for the ecosystem to have competitive offers. So some folks also use Zoom, for example, for video. And then they can use Office collaboration and projects on Teams. Slack is really the chat and social aspect, and also collaboration. But the Teams advantage, obviously, it's 100% integrated and tightly integrated with Microsoft Office. So all your Office assets, whether it's your Office documents or projects or your email, that's fully integrated. So Microsoft certainly has an advantage there. But yeah, we have seen enterprises do deploy multiple technology stacks. So we continue to go deep and support our customers, and our strategy around multi-cloud and multi-platform is to follow customers. Enterprise customers by default these days use multiple platforms. You just pick any random, throw a dart and you land on enterprise customer. They will most likely use Microsoft Office 365 for their office requirements, modern workplace requirements. And then they most likely use some sort of CRM, maybe Salesforce for CRM, maybe other cloud storage like Box for storage, and Amazon AWS for some compute. So many enterprises are multi-cloud today. And that's also part of their business continuity process. So we also support multi-cloud from that flavor. We go deep and we support our enterprise customers to overall manage their cloud data.
One of the questions I see, because of your relationship with Microsoft and kind of what you offer to the enterprises you work with, is why doesn't Microsoft consider buying out AvePoint instead of the company operating on its own?
Right. So there's actually much literature written about this topic around how Microsoft continue to keep their dominance in the enterprise space against the Google and Amazon of the world, is that they have built over these decades a deep and wide moat of partner solutions like AvePoints to make their technology much more sticky and much more customized, if you will, for the enterprise customer. So partners like AvePoint complete the last mile problem. We have fantastic solution for vertical industries. So for example, 50% of our customers come from highly regulated industry, including governments, as well as financial services, manufacturing, pharmaceutical, health. So from that perspective, these industries have much more rigorous demand. At the end of the day, Microsoft provides a singular cloud platform that services 250 million users. That's users as complex as a Goldman Sachs on one end and as simple as a 20-man accounting firm down the street, right? So at some point, that singular cloud platform cannot meet everyone's needs. And this is where historically and continually Microsoft rely on partners like AvePoint to complete that last mile problem. We actually make their solution much more sticky and make them actually work better. So really get customers to maximize their ROI out of the Microsoft stack. So that's a really positive win-win symbiotic relationship. And that's something that Microsoft continue to encourage to bring more folks onto the ecosystem. The fact that our press release you saw have Microsoft Corporate VP of Partner Channel, Gabriella Schuster, talk about endorsement is the sign of Microsoft actually want more partners to join their enterprise platform ecosystem here, therefore overall continue to build their dominance in the enterprise space.
Okay. So I saw in the press release, you guys belong to a select group of companies. So $150 million in estimated revenue, year-over-year growth of 25%, EBITDA of 10%. So out of 212 software companies, there's only 5 that currently meet that criteria in Atlassian, RingCentral, ServiceNow, Zoom Info, and Zoom Video. What does it mean to kind of be included in this group of companies that all have had pretty successful years, in the software industry?
Yeah, we're incredibly honored to be in that rare classification, the top performers here. It's nowadays everyone talk about SaaS, B2B software, but most people just think that you have to burn cash to grow. That's the antithesis of our business strategy and philosophy here. We have grown this business, Chris, for the last 19 years with only just $60 million primary capital, with no debt. We went through a subscription conversion from a traditional licensing model to a subscription license model where you always go through this cash crunch initially. We've gone through that without borrowing any money. So we are very, very financially disciplined. We've been running this business like this for our 19 years of history. And we have, for vast majority of our history, we have always shown high growth at cash positive levels. And that's what we continue to do. We are one of those rare SaaS companies that have high growth and grow at a profitable cash positive margins here. So we're excited to be in that class, and we intend to maintain that type of characteristic in continuing to grow here.
So I want to get to some questions from the chat. I'm not sure if you can touch on this one at all, but a lot of people are kind of asking about the merger date. So I know you probably can't give us a date, but just throwing out there if you can. Otherwise, are we still expecting to see this close in the first quarter?
Absolutely. It will be Q1 2021. That's right.
Awesome. Yeah, a lot of people asking about that. And then I know a couple people touched on financials. I saw in your report, so recurring revenue seems to be really strong. So the 4 quarters in 2019, 75 million, 78 million, 85 million, 90 million. And then the first 2 quarters of 2020, 95 million and 101 million. So each quarter has not only grown in terms of revenue, but also in the percentage growth. So what is the kind of shift you're seeing in that recurring revenue for your business?
Yeah, so the ARR, annual recurring revenue, is growing, and it will continue to grow at that pace. So this is our second year of 30% ARR growth, and we'll continue with that. So the shift is really, again, we completed our subscription conversion in 2018. So 2019, we come out fully with that flywheel of subscription business. That's really contributing the growth of the ARR. This year, we also changed our sales comp model to focus very much on ACV, because over 18 months, we invested very aggressively into customer success. So again, we have full confidence now to have that consistency in existing customers renewing at a high rate. So then our sellers will just focus on their new logos to go get. So going to every new year, over 70% of our revenue, it's already spoken for. And that's the beauty of the subscription flywheel business. So that's why we continue to see our ARR growth with consistency and predictability of the business.
Okay, and then I'm seeing another question in the chat talking about competition. So I know you're the #1 partner for Microsoft in that industry. Do you have any major competition as far as being a partner with Microsoft?
We actually don't have any singular competitor. As I mentioned, we are the only end-to-end information management provider. And it was due to history of us came from the SharePoint world, where SharePoint is Microsoft's enterprise content management platform. It's big, it's sophisticated, only large enterprise use it. And then when we moved to the cloud, it became the underpinning of the entirety of Microsoft Office 365. So anything that you do in Office 365, invariably, if you want to share documents, co-authoring, use Teams, you have to use SharePoint. So because of that, we build a dominance in SharePoint space by doing the end-to-end, and we took that to cloud and do that end-to-end for Office 365. And because of that, we don't have any singular competitor. We have point competitors, so in the backup space, for example, or in the migration space, or in the compliance space. But they also, it's interesting, we are very, very much focused and strong in the enterprise space. By enterprise, I mean a business that do at least 250 million annual revenue and above. And we have another category. So mid-market is 250 to 2.5 billion. And above 2.5 billion annual revenue companies are enterprise. So we have these segmentation, enterprise, mid-market. And then, of course, we talk about SMB. That's through distribution channels. But in the enterprise space, our point competitors are not SaaS. So most of them are very late to the game. So they're not SaaS. So we have a huge advantage there. And then of the SaaS players, the point competitors that we run into, they're very much focused on SMB. So 250 million annual revenue or smaller businesses, or 500 employees or smaller businesses. And that's a net new growth area for us. We can take the enterprise-grade SaaS solution to offer to the SMB space through channels, through selling to MSPs, managed service providers. So in both areas, we enjoy competitive advantage. In the SaaS area, our point competitors are much more SMB focused. We can take enterprise grade SaaS and go compete there very aggressively. And again, because we have the breadth, we have advantage. And then in the enterprise segment, our point competitors are traditional on-prem competitors late to the SaaS game. There we have another huge advantage because we have first mover advantage. Again, we have the breadth. So overall, that's how we have this tremendous market opportunity in front of us. Going back to our earlier point, that's why we're very confident to go from this 7 million users to this 50 million users in the next few years.
So going back to Microsoft, so again, going from 7 million to 50 million as the goal here, maybe not so much short term, but long term, do you see yourself working with other providers other than Microsoft, or is it just kind of strictly, working as their partner here in the cloud industry?
Yeah, again, our multi-cloud strategy is to follow the customer. We go deep into the customer. We have a tremendous sticky relationship with our enterprise customers all around the world here. So in order to do that, we have to support other cloud. And customers behave characteristics are very different. So as mentioned, 40% of our enterprise customers in North America, 30% in Asia, 30% in Europe. So these different regions have different characteristics. For example, in Asia, there's a lot more Google at play here because Google moved earlier in the SaaS cloud world in B2B. So many of our customers are already coming to us and say, hey, can you support G Drive? Right? So a different aspect of the Google ecosystem as they try to migrate also from Google to Microsoft. So we will continue to follow the customer and support other platforms so that our customers at the end of the day have a holistic data management strategy and partner in AvePoint.
Awesome. I think I saw one more question was kind of talking about some blue chip customers. Is AvePoint allowed to disclose customers that they have? Is that something that will be announced like in future press releases when deals are signed? Or, is that just kind of more of a total number of customers that we'll look forward to in the future?
One easy indication, just look at our website. We publish customer case studies. So the blue chip customers that are willing to get their name mentioned, we have case studies on them. So just go to our website and check there. So for example, we have Thermo Fisher listed out there, as well as the State Department. So so that's the best way to do it because typically regulated industry, as many of these customers don't want to be public mentioned, but of the ones that are able to, we have case studies on them.
Awesome. So that's going to wrap up our questions today. Big thanks to TJ Jiang from AvePoint. Again, they are merging SPAC deal with Apex Technology, symbol APXT, a major Microsoft cloud partner here. We love getting color from you. Again, thanks for your patience. Sorry about the internet issues today. And same to the people in the chat. And thanks for your patience and tuning in. So TJ, thanks for joining us. We'd love to have you back on sometime, and we look forward to following the progress of this SPAC deal getting done.
Thank you, Chris. Thank you, Mish, for your time here. Pleasure to be on the show.
Definitely, thank you. We tried to do with all the best struggles that we could, but like always, guys, we'll see you guys next time. What we're going to do is we're going to put out this interview also. It's already recorded, so we'll try to take out any of the lag parts so that you guys can get the information nice and clear from this. All right, guys. Like always, guys, stay with us. Hit the subscribe below, and we'll see you next time on the SPAC Attack.
Thank you.